Now welcome to this video, which is called Predicting Gold using the techniques of W.D. Gann, and it's the third part. And in part one, and I'll stick a link here so you can go and watch it, I gave some signals and I showed you the signals that I gave at the time, and basically just to summarise, I said there was a possible short here, but it just went straight through and so nothing was signalled. I then said this could be a possible buy signal, and it happened to be the bottom. I then said this was a possible short, and it happened to be the top. And then I said this could possibly be a shorting opportunity here, and is where the market collapsed. And that was basically everything on part one. And then I did a follow-up video, and when the market looked up like this, and on the focus signals I said that this was a possible buying opportunity, and it turned out to be the bottom. And in the next one I said there was two levels I was watching. One was where it turned, which was here, which is actually when I did the video, and one was a bit higher. I set my heart on the bit higher one, so I didn't actually do it, but it turned out to be the top. And again, I was saying it was going to go down. I didn't think it was going to go up. And then the last signal we looked at in part two was that I said this was a possible buying opportunity here, and it happens to be the bottom, and the market went up from that point onwards. So what I'm going to do now is look at the next two signals that I actually gave as the market started to rise up from a buying opportunity. So we've changed the daily chart, and the next signal I gave was on the 26th of July 2013. So the market actually looked like this to me at the time. So I'll now play you the focus signal that I gave on that date. Now, as discussed in the trainer video, the 26th of the 7th, 2013, I'm watching for a possible short if it can reach the -2x1 calendar and not go any higher than the 14.285, or not by much anyway. So this is what the chart looked like when I did the focus signal back in July, and what I said was that I wanted it to go sideways to this angle and not go higher than 14.285. So let's see what happens. The market starts to go sideways, and it then reaches, this is actually an angle, but when it reaches the angle it's also a trend line, and something that I teach people is never do the obvious. And so I use my my knowledge of technical analysis as reasons why not to make a trade. So if you can imagine that when the market looks like this, anybody who's got a ruler or some software that does trend lines would go to this low here, draw a line through this low here, and would see a trend line. Now what tends to happen is it'll work just long enough to get people into the trade to buy it in this particular case, and then break through to the downside. So never do the obvious. You can see another example of it coming down here. Now this angle here is actually a 3x1 angle. You draw it before this top is made because it's a set geometric angle. However, once that top's been made, people who do use trend lines would go to this high here, draw a line through those two obvious tops, and would see that there as a possible shorting opportunity because we've hit the trend line. Again, don't do the obvious, and you can see that it goes down for a couple of days, encouraging in this case people to short, and then quickly breaks through to the upside to catch them out. And in fact, the level that was the angle I was watching was actually is a bit of a trend line, because you can see that those two, that top there goes through that top there. And anyway, let's see what happens. The market encourages people on that rising trend line and then crashes through to catch them out. Then you get a lot of people start shorting because it's broken below the trend line. That's also not a good time to enter the market. You can pretty much guarantee that the market will come back when you break through obvious trend lines, and you can see that the market does go down, but then very quickly it rises. And in fact it rose to the angle that I was watching, and it got to the level where I was looking to short the market. As I said already, it's a bit of a trend line, so that was putting me off. The next day had an inside day, and I was going to do it the next day if it broke out of the inside day to the downside. but it had already, the next day had already broken below out of the trend line when I came to look at my prices first thing in the morning, and in fact the price was up near the highs for the day here. So I was still interested in doing it, but it had to come back down below the low of that day. That didn't happen, and the next day it broke through. But you can see that the angle that I drew did work, but as I said before, it is a bit of a trend line. Now one of the things I said in the training video is I wouldn't be interested if the market here would have gone up to the angle. If I draw it on here for you, wouldn't be interested if the market would have gone up to the angle and hit this 0.618 retracement between the high here and the low here, because it's a retracement of 0.618. Again, it's a very well-known technical analysis rule by a guy called R.N. Elliott. I never ever trade obvious things. They never ever work. You can always find exceptions to the rule, but in the vast majority of cases they're just mux plays. And what tends to happen is the market will stop there. It'll encourage people to go, in this case, short of the market, and then it will go, well, probably to the upside. So you also need to know when not to trade as well as when to trade. In fact, knowing when not to trade is far more important than knowing when to trade. And actually what happened was it did actually stop at this level, encouraging people to short it. And in fact, I actually did my next focus signal when the market looked like this. And basically, I said, as I said, don't short the market here. It's as I said, it's a bit of a mux play. So let's put on my next signal. Now let's go with the training video of the 22nd of August 2013, and as discussed in there, I'm looking for a possible short here. Okay, so this is what the chart looked like when I did the focus signal, and as I've already discussed, there's quite a few reasons why I wasn't interested in shorting it here, because it had retraced, as I already said, 0.618 of its last movement, but also it's an incredibly obvious trend line coming down from this high through these two tops to here. So you get a lot of people who will be looking to short it round about here, so that probably means it's going to go higher. And in the focus signal I said that I was looking to short it off this angle, and this level here about 1420 was the place I was looking to short it. Now everybody back in the middle of 2013 all the way through 2012, all through 2011, were all saying how gold was going to go through the roof and it was going to go a lot higher, and I just here basically all I've really said is just give me 1 second. All I've basically said so far is that I thought that this was a buying opportunity around here. I was looking for a short here, but as I showed you, didn't show the weakness I wanted, and the next signal I gave was I'm looking for a shorting opportunity here. So I'm not looking to buy it. I still think it's going down, even though at this stage it looks like it's quite strong. So let's actually see what happens. So I'm not interested here because it's 0.618 and a very obvious trend line, and I'm waiting for this level here and the angle. So the market goes up, and then I'm interested, I'm looking to short the market, and it gets to my level, and this is where I was looking for weakness. Now the next day it broke my angle by too much and the level that I was looking, so that put me off making the trade, but then the next day it goes down, and just cut that out of the way, it happens to be the top of the market, and in fact I probably should have done it. In fact, I was very close to doing it here, but it broke my level by too much. It's great with hindsight all this to go and say that something's happened, but I was bearish. I never said buy it apart from at the bottom down here, and then the market since then has been pretty much going down. And if we bring it up to date, that angle shouldn't be cut. If we bring it up to date, that's what the market looks today. and all my signals are all basically looking for buying opportunities now, but are lower than this low, which I've been saying since that top. So at the moment there's no reason to particularly short it where it is, and I still think it's going lower, where eventually it will probably become a fantastic buy, but not yet. So I hope you agree. Again, being pretty much right on the directions of Comet's Gold, which is basically what you need to do to be a success. First of all, you've got to decide which way the market's going to go, of course.